Looks like we're ready to get started. Want to thank everybody for attending today. This is, of course, is our Colliers Idaho 2020 Outlook Conference, and this is our breakout pod for Canyon County. It's a pleasure for our team to be here today. We look forward to sharing our market knowledge and answer some questions. Before we get started, though, I'd like to thank our keynote speakers, Stiag Seward and Matt Erpelding, for sharing their insights. Additionally, a special thanks to Washington Trust Bank for sponsoring this breakout session. Next, I would like to introduce you to our Canyon County Brokerage team. We are the only full-service commercial brokerage to have an office in Canyon County, including full-time property manager Lisa Cochran. I also want to give a special shout out to Kayla Nakata, who is our licensed brokerage assistant and does a wonderful job on keeping our typical 100 to 175 deals a year for our team on track. Now on to our presenters today. Bryant Jones will be speaking about industrial and land. Lincoln Hagood will be covering retail and office, and yours truly will give an update on multifamily and investments. We are targeting about 15 minutes of presentations and about 15 minutes of questions. So please feel free to ask questions throughout the presentation via the Q&A box that's on your screen. We will be monitoring these questions throughout the sessions. And with that, I would like to turn it over to Bryant Jones.
Good morning. One of the hottest property subtypes this year has undoubtedly been the industrial market. The industrial sector hasn't really been affected by COVID as much as some of the other sectors. On the industrial leasing side, buildings are leasing as soon as they become vacant or completed if under construction. On the sales side, with where interest rates have been and construction costs, existing or new, they only last a few days if they've been priced within the market. Industrial rates in Canyon County are generally between 60 and 75 cents a square foot, triple net, depending on age and size. On the sales side, we are seeing industrial properties trade between as low as $85 a square foot up to $140 a square foot, which is obviously age and location dependent. We are seeing industrial businesses, both small and large, coming to Canyon County from other regional markets, which I believe has been from the Amazon effect, how some of the neighboring states have been handling the COVID pandemic, and also Idaho's lower tax rates. The 1,500 to 3,000 square foot spaces have been in the highest demand, and properties with yard are in even higher demand. Fenced graveled yard is renting around 4 to 5 cents a square foot. Industrial vacancy in Canyon County is about 2.8% per our Q3 Colliers numbers, and now under 2% as we go into quarter 4. A few general projects that we will see coming in the next year are the Ball Ventures North Ranch Business Park with over 1.5 million square feet of industrial flex space coming in Caldwell across from Sky Ranch on the Franklin Caldwell exit. Adler Industrial, who purchased the Van Opera portfolio last year, is planning 2 large 140,000 square foot flex buildings off the north side exit in Nampa and have a lot of land parcels around that development to build additional buildings. A few other small developers that have access land will also be building spec buildings in the next year. And I'd see the industrial rates to continue on that upward trend to keep up with construction and land costs. Next, I'll discuss the Canyon County land market. Sticking with industrial, but on the land side, which has been one of the hottest property subtypes, along with multifamily and residential land. Industrial land in Canyon County has been in low supply. New industrial pads in Nampa have come to market and have traded between $6 and $6.50 a square foot, and around $5 a square foot in Caldwell, which has mainly been in Sky Ranch. The industrial land supply of those half-acre to 2-acre parcels in Canyon County is really low as we're getting into quarter 4 of 2020. Multifamily ground has been in high demand with developers from all across the region looking at our market and wanting to build new multifamily. Our market has seen several transactions and new construction. Land prices for multifamily have been a little across the board, which has been dependent on location, but also on the cost to develop the site, bringing utilities to the site, or even dealing with lava rock. We've seen multifamily around that $2 a square foot all the way up to $5 a square foot range for the prime properties. Residential ground in Canyon County has also been a hot spot, along the same lines as what is bringing the industrial users to our valley. Those users and employees need homes. And with land prices a little less than Ada County, Canyon County has seen a lot of the farmland sell to residential developers, We've seen residential developers in Nampa near the freeway pay between $40,000 to $60,000 per acre for ground. Ground south of the freeway in Nampa is closer to $35,000 to $45,000 per acre, and in Caldwell, $30,000 to $45,000 per acre, depending on how rural it is. And I'd expect things to continue going into 2021. Office and retail land has probably been the slowest product type. The hot area has been the Idaho Center market, with Amazon nearing completion and the close proximity to the freeway. Most office retail users are either looking at the Garrity exit or the Treasure Valley marketplace, and that is trading between $9 to $14 a square foot. And now I'll pass it on to Lincoln to give an update on the office and retail market.
Thanks, Bryant. And so on office, we've seen occupancy remain strong despite COVID issues. As of Q3, Nampa's current office vacancy is at 4.38%, and Caldwell is just hovering right above 4%. COVID has had some significant impact on Class A office users, as we learned from Stieg, in a lot of larger markets. However, Canyon County really has very few Class A office buildings. The majority of office users in Canyon County are really less than 3,000 square feet. However, downtown Boise has seen some more vacancy than where we are at in Canyon County. Even though the Canyon County office market is doing well, several office users in Canyon County have their primary location in Boise or Meridian, with the Canyon County office being a secondary or tertiary location. As a result, we expect that if these businesses do need to downsize, that they are more likely to close their secondary or tertiary locations first. And thus we expect some more office vacancy to occur due to COVID concerns. However, it's been business as usual for the most part in Canyon County, with the majority of office users returning to their offices by July or August for those that had taken time away. Nampa's office market has also stayed fairly strong with lease rates. For most vacant spaces, we're seeing a few landlord concessions, but for the most part, we're seeing pretty strong absorption. Really, most of the vacant spaces in Nampa are sitting empty, where landlords are asking $2 to $3 a square foot above the market rate. And we have seen some new construction in Nampa, but it's been limited. This has also helped keep the office vacancies down. This is, as probably everybody knows, due to rising land and construction costs that don't pencil when compared to current lease rates. However, we have seen some owner users and some investors building despite these market constraints. Caldwell office leasing has been consistent with where it's been in prior years. Unfortunately, Caldwell lease rates just do not justify new construction, as rents are typically 30% below where most developers and investors like to see rents for new construction. Office demand in Caldwell has been soft for many years, with few office users actually looking at the city of Caldwell. Most seem to focus on cities to the east. When offices come to market, they are typically available for 90 to 360 days in Caldwell. And much of the available office space in Caldwell is older or tired, with limited options available for new tenants. So even when someone is interested, there's not a lot of options for them. Traditionally, and this is kind of one key point, traditionally office space in Canyon County has been either full service or modified gross leases. However, we've begun to see a shift by a handful of landlords who have tried to incorporate triple net charges into their lease rates. This trend is becoming more frequent with Class B or Class C offices rather than Class A, but it's an interesting trend to be aware of. From recent office tours, I can say that office users are turned off by triple net charges when there is a competing option that is either full service or modified gross. So now I'm going to talk about Canyon County retail. Just like with office, some retailers are struggling, but we have yet to see many defaults on leases in Canyon County. Vacancy rates are still reasonable considering what COVID's impacts have had on our economy. Nampa's retail vacancy is around 8.58%, and Caldwell again is just hovering above 4 at 4.02. The vast majority of Canyon County's vacant space is in two projects, the Nampa Gateway Center and the former Karcher Mall, which has been rebranded as District 208 and partially demolished last year. Many Canyon County retail spaces are smaller and located outside of nationally anchored retail shopping centers. Thus, these larger vacancies have a more dramatic effect on the numbers. Some smaller retail spaces have seen some increase in vacancies, but many of the nationally anchored shopping centers and other prime retail locations are staying well occupied. We are seeing less leasing activity in the retail sector, primarily national tenants being the most active groups. In Caldwell, we have seen some spec development and prime location development try to garner some Meridian and Boise lease rates, but most of these spec developments have failed to achieve those higher lease rates. And what we've seen is some landlords are slowly reducing their lease rates. Others are offering some pretty significant incentives, and even a few others are trying to sell their buildings just to move on to other properties. Around the Idaho Center in Nampa, we've seen vacancy rates decrease. This is most likely due to the fact that Amazon's construction is nearing completion. One market sector that we're seeing some growth in is quick service restaurants with drive-thrus. They're obviously doing very well. You only need to drive by any one of these to see the extended wait lines. As a result, we've seen some restaurant users who've traditionally not have drive-thrus shift their focus away from sit-down spaces. This is increasing the competitiveness of what was already a pretty competitive product type. And these drive-through spaces are garnering anywhere from $3 to $6 a square foot higher with lease rates. We've also seen a handful of retail buildings in both Nampa and Caldwell that were purchased at pretty reasonable prices a couple years ago. But we've seen some of these investors try to turn around and flip these properties for anywhere for 25 to 100% higher prices than what they paid a couple of years ago. Some of these have sold primarily in Nampa. In Caldwell, we've seen some of these options sit on the market with less investor interest. We're seeing some cap rate increases to try and lure investors into these properties. All right, and next I'm going to turn it over to Mike, who's going to talk about multifamily and investments in Canyon County.
Thank you, Lincoln. In Canyon County, we continue to see strong multifamily demand, which is being fueled by in-migration and lower rental rates versus Ada County. As most of you know, the COVID pandemic and unrest in many of the larger coastal cities have accelerated people moving into our state. This has kept vacancy low and supported historically high rents, even with record new inventory coming online. To get kind of an idea on what I mean by historic high inventory coming online, we can just simply look at the permit activity from the last few years. In 2018, we had 25 multifamily housing permits for 202 units for just over $19.2 million in value. In 2019, we had 46 permits, just over $54 million in value and 589 units. We typically see about a year to develop these out. So when we look at those high numbers in 2019, you can see that almost double the amount of inventory is coming online in 2020. And then speaking of 2020, year to date, we have 26 permits that have been applied for with a value of $14.8 million, an additional 228 units. How this is impacting vacancy and rental rates, we'll go back a year from now in end of Q2 2019, Ada County had vacancy of 2.71%, and your standard 2-bedroom, 2-bath apartment was renting for $1,022 a month. In Canyon County, we had 1.1% vacancy, and that same 2-bedroom, 2-bath was renting for $922 per month. Fast forward to the end of Q2 in 2020, Ada County vacancy has increased to 4.3%, That 2-bedroom, 2-bath is renting for $1,081. And in Canning County, vacancy has gone to 2.93%. And that 2-bedroom, 2-bath is stabilized still at $921. When we're talking about how vacancy affects the market, to give a little perspective, typically a developer will pause on new development once we have vacancy stabilized at 5% or higher. And historically, we tend to see landlord concessions start when vacancy is stabilized at 7% or higher. Moving on to our investment activity. Our office has seen demand in Canning County investments increase over the past year. Additionally, we've seen cap rates in Napa are now pretty much in tune with Ada County in most cases. Caldwell is still lagging slightly, probably behind about 250 to 500 basis points in most cases. We look at deal trajectory out of our office. In 2018, we did just over $11.6 million worth of investment sales. The average sale price was about $1.9 million, and our average cap rate was 7.16%. In 2019, that increased slightly to about $12.3 million, with the average sales price of $1.1 million, and cap rates were about 7.25%. The big changes happened in 2020. So far, year to date, we're at $17.4 million in total sales, and the average sales price has increased to $4.3 million, and our cap rates have gone down to an average rate of 6.33%. As new construction in Treasure Valley is trending west, we feel Canning County is poised well for future residential and commercial development. This, combined with historically low interest rates, we think this will continue to drive more long-term investment opportunity and growth, especially in industrial and multifamily sectors. With that, we're going to kind of move on to the question and answers part of our segment. See, one of the ones we have that are in are, with industrial expanding at a rapid pace in Canning County, where do you see the next areas of industrial development?
I believe the hotspots for future industrial probably in 3 different areas in Canning County. One would be west of Caldwell, off of the old Highway 30, off the exit 25. You have the eastern side of Nampa between Meridian. I'd see eventually Nampa and Meridian connect. And then third would be north of the sugar beet factory near the North Side Boulevard exit.
Thank you. Let's see, another question is, what is happening with downtown Napa and Caldwell?
Yeah, I'll take that, Mike. So in both downtowns, what we're seeing is strong activity in the core areas. So in downtown Nampa, that's on 1st and 2nd Street between 12th and 14th. And then in downtown Caldwell, that's on obviously on the plaza, or any property that's fronting the plaza. In these locations, we're seeing strong interest. We're seeing the highest lease rates and pretty high demand for retail spaces in that 500 to 2,000 square foot range. There is also some office interest in those downtown cores, but for the most part, there's not a lot of office options in those areas. Typically, it's smaller suites like 200 square feet to 500 square feet. There are a few office users that we know would probably take a larger space if it was available. The challenge being in a lot of those areas, they're downtown historic properties. Not a lot of them are ADA accessible, and so there has to be some conversion to make some of those spaces viable for office users. Areas outside, properties located outside of these prime core areas are a little less desirable. We're not seeing anywhere near as much activity. It's kind of like you have a tenant that says, hey, I want 1,500 square feet, and they say, this is where I want to be. And if you put them an option in front of them that's 2 blocks out of that area, it's kind of like, well, maybe I might consider that. So I would say that both of the downtowns have seen a tremendous growth in the last couple of years, and we expect them to continue to Thanks, Mike.
Thank you. Let's see, our next question is light industrial land prices versus spec construction versus westward migration.
I'll take that one too. I'd say first, land prices. Land prices in Canyon County for ready-to-build industrial pads are ranging between that $5 and $6.50 a square foot range. Raw industrial ground with no utilities or access, you're looking around $2 to $3 a square foot. On the spec construction, on the sales side, developers are bringing new industrial to market at that $125 to $140 a square foot range. On the lease side, you're seeing closer to 70 cents to 75 cents triple net. And then on western migration, we're seeing users, buyers in the valley come into our market and look at the Treasure Valley as a whole, including Nampa and Caldwell in their search. Whereas years ago, you'd be looking specifically at the Boise Meridian market for users and not having interest going further west. If anything, I'd say it's almost flopped to where users and buyers are looking more at the Canyon County market, where dirt is a tad cheaper. Thanks, Mike.
Appreciate that. The last question I think we have here is, what possible concerns are on the horizon that could have a negative impact on commercial real estate? I'll go ahead and take that one. For me, there's probably about 3 areas that I'm most concerned about. First is low-hanging fruit with, the COVID impact on particularly the hospitality industry, our office and retail sectors, and the questions out there whether or not we're going to get federal stimulus for additional help for these businesses that have been shut down, and additionally the hopes that we're going to have a viable vaccine in the near future. The second item I'm concerned about is our commercial mortgage-backed security loans. In September, notes that were more than 90 days past due are estimated to be about $2.2 billion. The leading sectors that are impacted on this are hotels at just over 17%, and regional malls just under 19% of this debt that's past due. These sectors have obviously been heavily impacted by COVID, and if the COVID impacts continue without any additional workout plans from the government or debt relief from their lenders, we could see some large foreclosures. These foreclosures amounts could be so large it could put actual big strains on our financial institutions and potentially cause another financial crisis that could impact the entire U.S. economy. And the third and final thing I'm concerned about is tax reform, which is going to be depending on the upcoming presidential and congressional elections. This could have an impact on capital gains taxes and potentially the elimination of the 1031 tax deferred exchanges. I don't think we have any other questions right now. So with that, I guess we're going to wrap up this pod session. Want to thank you for attending our Outlook Conference this year during these unprecedented times. Additionally, I want to give a special thanks to Washington Trust for sponsoring this session. And also big thanks to Melanie Nielsen, Amy McKinnon, and the rest of our Colliers marketing team for organizing this event. We hope to see you next year in person under some better circumstances. With that, I thank you for attending and have a great rest of your day. Take care.